I am so excited to welcome back the great Ferg, who's been so right about so much for the last 6 quarters that we've been talking. Welcome back, Ferg.
Good. Thanks for having me back. Always love chatting.
Now, the pleasure is all ours. Anyone who gets to listen to you speak, because again, like, you deserve so much credit for just nailing this market. We were talking before we got on air about how you're probably one of the few people that are just sitting back watching things unfold and not having any problems with your portfolio, which is unbelievable. So, like, what is your take on kind of like the overall big picture for like the commodities markets right now?
I don't know. It makes it tricky because I've always sort of didn't want it to happen like this as such. Like, it's always it always makes it hard to kind of to judge like prices when there's sort of an external factor. Like, we always set it with the likes of Sprott and the uranium market when there's sort of an artificial bidder trying to like corner the market versus the actual supply demand function. And like what happens if we get a complete squeeze early before the fundamentals have really bitten? And so I think that's kind of where we are now in a way. Is like, I didn't think oil was going to go crazy for another year or so, and yet here we are with it going crazy. And you just kind of take it, but I think it's going to cause an awful lot more volatility moving forward. I expect to see sort of big swings in the portfolio, but ultimately you just have to stomach it. So yeah, the short answer is it's great, but it's going to make for a pretty rough ride over the next few years.
What I want to do is play devil's advocate, kind of, because like do have the other side of the market, which has been completely wrong for over a year now, right? Like the big tech growth, that was the big trade. Now it's going away, but those people, deflationists, there's still deflationists out there, right? So some people are thinking that as soon as the tension dies down, like oil prices are going to fall again, right? Like any word, like 50% drop in oil. What do you think about the fact that like this could all be a temporary geopolitical instability? America could make a deal with Iran, Venezuela, and just maybe kind of like stabilize the market. They could bring out their reserves. What do you think about this argument that oil isn't as inflationary as many investors think it will be?
Well, it's kind of like the whole transitory argument as well. Like, certainly can come off. Like, there's obviously a big war premium in there, but I just think it's similar to the inflation. Like, if the rate of change drops but the absolute level keeps rising, then for me that's still where you want to be. And regardless of if it pulls back significantly, it doesn't really change the overall supply demand picture. You should always just be focused on supply demand, looking out regardless of what happens in the short term. And there's an awful lot of like sort of tail-end risks as well with this, because I don't think Putin's going to go quietly, knowing that he has such a tight control on a lot of the energy supply. So I think we'll probably see more craziness as a result of that before it all settles down. And then you do have this supply demand. I think it's really misunderstood when sort of people think like the likes of Iran is just going to flood the market. That oil's already all been sold. It's just all on the black market, and it's just going to become legit. So it's not as if that's a million new fresh barrels per day is just going to appear. It's already been sold. It's just the only one that I've heard that was quite smart take on it was Robert Mullen, saying the interesting play on that is actually the tanker market, because a lot of those tankers are that are sort of transporting the illegal crude. They're all past all their licensing. So when they have to, if it was to join the regulated market, those tankers will all have to go, which would significantly tighten the market, because they'd all have to join the normal fleet. So, but going back to the oil, it's it just muddies the water a lot and brings in a whole lot of other factors. But overall, it doesn't change your view at all. If it got in on the supply demand picture, I don't think it's gonna mean revert much. Sure, it could drop back to a more reasonable level for a period, but overall, it's going higher, and just the response we're seeing, like it's just, if anything, it's lifting demand because we just keep handing out subsidies to try and hold energy demand up and not hurt the consumer too much. So, and nothing's been done about supply. If you look anywhere, there's just this, the ideology is just as strong. Like you got the US that's sort of saying it's a misdiagnosis that this is a supply problem in oil. You've got Germany still convinced that they can get energy independence with renewables and doubling down on it. And nothing's been done to fix the underlying cause, which means we could get some heavy volatility, but overall the price is gonna have stabilized at sort of a new high and probably hit higher, unless you kind of can go down the road of the global bust. So I've had a good debate with a few people that believe in the global bust, sort of extreme supply destruction, demand destruction on the back of that. But when you go through history, it doesn't really support that argument. So you can look at the global financial crisis, and that was pretty rough, and that only impacted oil demand at a 2%. And then you had obviously March 2020 with the whole world being locked down, all air travel stopping, and like the early estimates were that was going to smack oil demand at least 30%. And it turned out it was only about 9%. So you can lock everyone in their home, stop them traveling, stop them driving, stop them taking any air transport, and you can only dent oil demand 9%. Well, I think that gives a good sort of yardstick of just how hard it is to reduce oil demand, especially when you've got the developing countries climbing their S curve. Like that's been some of the more interesting headlines, is where the likes of like the IEA have had to sort of admit that their missing barrels was really just a lot of the emerging markets, like the likes of China and India climbing their S curve and consuming an awful lot more per year, and they had to revise like 15 years of their data. So just essentially admitting that the world's oil demand is growing quicker than they'd been showing for quite a while now.
Yeah, that is the narrative, that oil's kind of where it was in 2008, and they think oil always precedes a recession. And so the higher it goes, the less demand there will be, the slower the economy will grow. But you're saying you've actually looked at the past, and you're realizing that, like, no, it doesn't really impact it. And there's still these supply issues. I mean, I think just today, the vice president of the United States said, at times like this, we need to turn to, like, we just need to buy more EVs, pretty much, right? She's pushing renewables. Another devil's advocate argument: is there any hope that technology or renewables can make a dent in fossil fuel energy usage?
The problem with that line of thinking is that it always discounts the fact that EVs and wind turbines and solar are all a derivative of fossil fuels. And so when, like similar to what we've seen with solar, so everyone sort of has liked to show what they call the learning curve, or sort of make analogies to like Moore's law, parallels to Moore's law. And really all it was cheap labor and cheap energy, namely coal, bringing the cost of polysilicon down. So when polysilicon's rallied with costly coal, the cost of solar's gone up. And you can show that across, like, a different way of looking at all the battery metals, as each of them is kind of a between sort of a third or even up to 40, pushing mid 40% of embodied energy, like the oil taken to extract it. And so when you look at that, to actually transition, we would have needed more fossil fuels to enable us to dig everything out of the ground and create all this extra capacity with renewables. And that's before getting to all the shortcomings of renewables. And so it's just flawed on so many levels. And and that's before you even, this energy independence with wind and solar is just crazy. And I think we've seen Germany is making themselves into a sort of a crash test dummy for the rest of the world. They're just gonna show how badly this goes and how reliant they are on Russia for all their fossil fuels. Like everyone concentrates on gas, but they not only do they import sort of over 50% of their gas from Russia, they also import over a third of their oil from Russia. They say they'll fall back on coal. They get 46% of their hard coal from Russia. They say they'll use renewables and they'll import to help sort of smooth over the grid. All 70% of France's nuclear power comes, half of that has to come from being enriched in Russia. So when you just look at the whole way the energy system is, like, yeah, it's backed themselves into a corner, and there's going to be consequences as a result of it, especially if they keep pushing this of the renewables without having any sort of base load. Yeah.
Yeah, it's crazy. They still are pushing it. I think most people realize how obvious, like, what you're saying is. They've even been talking about sanctioning Russian energy, but they haven't done that, right? They haven't, like, yeah. No, right?
Like threatening to pull out your life support when you're sitting in the bed.
Yeah. Yeah. Like, that would just instantaneously destroy pretty much Europe's economy, right? If they just, like, cut off Russian imports.
There is like a probably a 1 or 2% chance that the Greens actually say, like, this is our opportunity to rip the Band-Aid off and fully go for it. But that'd be horrific. Like, it's people don't understand when you talk energy. Often people just bring up graphs of, like, the electricity use of of sort of an economy, and most don't realize that electricity is sort of a minority. I think globally electricity is generally only about 20%. I think in Germany it's only about 18% of primary energy, and so heating's like double the electricity use, and transport's triple the electricity use. And so when you kind of state it like that, you just understand how massive a task it is to try and shift everything, electrify everything. Like, you've got to, like, sort of, like, you've got grid constraints, you've got just how much of this that you can possibly install. It would be difficult if you were just using, like, nuclear, let alone using the likes of renewables, when it can all go to, you can have periods when you've essentially got no generation, and they've got no ability to store any of it. It's just suicide. And I really do think you're going to see Germany essentially martyr themselves for the cause, unless it gets bad enough that they vote out the Green Party pretty quickly. But I think on a long enough time scale, you'll probably see a circumstance where countries have to sort of lock in their own energy and leave Germany out in the cold. Like, that'll break the whole solidarity pact of the EU. And then that was what the EU was formed on. So that will have massive ramifications. But they've kind of, they're heading down this road, and they don't seem to want to slow down at all.
Wow. So you think the supply demand gap is just so severe that there's going to be a global scramble for energy, and people are going to fight over it because they've made such bad decisions up until now. So if that's the case, you got to think, like, well, what can they possibly do in a worst case scenario like that? Like, can't America start up its fracking? I mean, would they ever do that? I guess they're never going to do that. They're, like you said, martyr themselves. Do you actually think that's what these governments are going to do?
Making an awfully good example of it at the moment. They're completely doubled down. If you look at what the new chancellor's done, like, they had Giza City achieve double the emissions reduction of what they had, like, a year or two ago. And so he's, but then it just gets caught up in bureaucracy. Like, when you read through what he's trying to achieve, he still gets caught up with like the distance turbines are apart, how far they can be from a building. Like, it just gets completely trapped in that. And with fracking, I think the best interview I've come across with that is just Cuppy and Josh Young. If you can find it on YouTube, just go and listen to that. And Josh just goes through all the issues they're having with trying to find trying to find labor, so they can't get enough labor to run these. There isn't enough new rigs. There's like they're working through all the ducts, like the drilled but uncompleted wells, which was kind of like the best, like essentially they're just working through all their inventory as such, and they're getting to the bottom of that, and that's what kind of caused the quick boost. And so once they've worked through that, then yeah, the shale growth is pretty much over. And with all these input costs going through the roof, I reckon the sort of supply response is going to be extremely muted. And then you also go through Josh's work about the OPEC, like the Saudis and the Russians are all overstated their capacity, and that's all been playing out. And yeah, you just arrive at this conclusion that we're very, very short of energy, and demand keeps growing at a fairly steady rate, driven by the developing countries. It's kind of like the maths have gone through a lot. Is just the fact that they're climbing their S curves. They're trying to get from their 3 barrels per person per year to their 4, and we're sitting up here lecturing to them at 12, 13 barrels per person per year. And even if they were to agree, which they won't, they want to increase their living standards. They've got the population growth, which is going to keep lifting it up. They're just adding, their demographics are great. They're adding 2 billion people over the next sort of 30 odd years. And that alone adds 50% to the whole energy mix. And yet we're kind of going backwards with renewables and EVs and other material dense energy forms with a sort of a low capacity factor.
It's just such an unbelievable environment. Do you see it playing out like the 1970s, where actually oil went from like in the 1970s $3 to like $39, so it 10x in price? You don't see any way that we don't hit an all-time high and just blast through it.
Yeah, well, certainly going for that if we keep trying to print money and subsidize oil demand. Like, it's just there's no way we don't go there with this sort of rationale. You keep killing the supply response and then keep printing money to hold up demand, then it's an absolute recipe for all-time highs. And I think using the European gas like energy equivalents, it makes it a bit more, because you kind of be laughed out of the room as kind of crazy if you name some of the prices, Chief, but we've just seen it creeping up. Like last time, a few months ago, I think the all-time high sort of on an energy equivalent basis with European gas would have been, it was like 320 a barrel. And then just working it out lately, it's if you use the recent high, it's like $600 a barrel. And so it's I hope it doesn't get there, because you cause all sorts of recessions and blow all sorts of stuff up. Like Luke Roman's great to listen to on this, like someone that really understands just how costly it would be. And you've got some good studies about whenever oil as a percentage of GDP goes above sort of that 5-6%, then it generally causes a recession. And you can go back and look at that over a long time frame, and it's a pretty tight correlation in it, and it feels like we're setting up for that in a big way.
Yeah, just like in the 1970s when the Fed was trapped and there was out of control inflation and they couldn't raise rates until they did, and it was 20%, and it crashed the markets.
Yeah, it is, and they don't even have a lot of the options they had back then. Like, they can't let rates go up. I think Luke was saying for every 100 basis points they increase rates, they increases debt servicing 300 billion, which is like, I think it was 9% of GDP. So you just can't, you do the maths on that pretty quickly. That's just blows debt servicing out of the water very quickly. So they have to hold it down, and then that means the dollar is the kind of blow off valve, and then everything priced in dollars. That's where you kind of get these crazy prices as well. Like, it's I'm sort of prefer not to mention it because everyone thinks you're crazy if you start naming, sort of adding hundreds to a lot of the stuff. But what we're seeing in the lack of any sort of supply response, it is where we're heading. I think we're going to see lots of just absurd prices right across the commodity space,
We pretty much have.
especially in energy.
Yeah, it's pretty much a no-brainer at this point. But you could have, in America at least, the ruling power thrown out, replaced by Republicans. And Republicans have been on the side of fossil fuels. And so that could at least psychologically calm the market, right?
Yeah, I don't buy it because the mistakes have been too large for too long now. Like they can't, and a lot of the things that held the energy price down for a while, like the shale boom, that was largely a bubble as well. That was just easy money, and no one's going to make that mistake again. Like you can see it if you just look at all the shale codes are doing now. They're just trying to give money back to investors and sort of right their wrongs. And so they're not going to suddenly just ramp production like they have in the past. And so you really got to ask yourself, where is all the additional supply going to come from in the world? And everyone has like even with what we've seen in Russia, like all these sort of likes of BP and Shell patting themselves on the back as they're going to try and divest of their sort of Russian assets. Like none of it's supply positive, and just if you don't get the supply, the price has to sort of take up the slack, has to incentivize. And so I just think we're going to see absurd prices over the next few years, and stuff that you would have been laughed at for saying sort of a year ago.
Right. Well, like I said, oil went 10x up per barrel in the 1970s. So if it even goes 5x, it'll be insane now. I do want to get to uranium for sure, but how are you kind of playing the oil trade? Because I'm in the Wall Street Bets group. They're already starting to get all excited about these like oil companies. It's going to get crazy, frothy, and bubbly. Are you going to exit at some point? Like if oil does hit like $200-300 a barrel, would that be enough for you to like cash out, or how are you kind of playing this long term?
Yeah, so I've got a large position in just straight WTI calls. So I put about 2/3 of it into spreads. Like I bought an awful lot of 95, 105, 2024, December 2024 spreads. So kind of locked in them for a while, and I bought the other third. I just bought straight sort of out of the money calls, sort of like 160, 170, 180, even 200s. And so those are my sort of money maker. If I just see an outright sort of blow off, I'll be taking them all off the table. So that'll be if things just get absolutely crazy. And so that's kind of how I've got leverage to the oil space. Obviously that stuff's been doing super well lately. And then from there, I've got like a whole thesis around picks and shovels. Like I've gone through the whole oil service space, sort of the whole offshore space, and just picked a few names. And those are sort of those are ones that I think will do well as the whole sort of energy space realizes we do have this massive supply problem, and capex kind of floods back in because the whole service space has just been absolutely capital starved. Like producers have managed to have some cash flow from operations, obviously, but the service guys are just absolutely got no dollars at all. And if anything, it's been rougher because, everyone sort of views this recent oil movements as just a result of sort of a war premium rather than anything to do with like long term. So everyone sort of thinks it'll mean revert. It's still the supply guys don't get any money. So it wasn't actually the greatest having a decent weighting in a lot of the supply names, because you obviously would have been better off having just leverage to the underlying commodity. So I'm sort of big picture. That's just how I'm playing oil. Just sort of a straightforward play on the options, and then the services just because they were dirt cheap, and I think they'll do well over the longer term.
Yeah, these oil equipment and services, even the ETFs are just like at like 5-year lows. So
I haven't been right all along. Yeah, I think I mentioned Luke Oil, so got absolutely destroyed on that. I talked about options for Saipem, and they, after the CEO gave a glowing review, then came out and said they pretty much missed their sort of lost half their revenue due to cost overruns with offshore, and so got pretty much cut in half on that. So yeah, I want to paint the picture that I'm calling this all perfectly. I'm making a lot of screw ups as well.
well, as a contrarian investor, you kind of need to until the market finally turns around. You've been a contrarian investor while tech was ripping, buying this stuff super cheap, and yeah, eventually things turn your way, and it's hard to do that. So congrats again on this amazing trade in oil. What about Noble Corp? Because I remember you talking about that one. That one's just gone straight up since its IPO, pretty much. Is that too?
So
Yeah.
those are interesting because if you look at what they've done, they're just they're picking up a whole lot of cheap assets. They're I forget all the ones they picked one straight up when they before they even got relisted. I'm trying to remember what it was. It was like a Shelf or Pacific. They picked that up. They merged with Maersk. I wouldn't put it beyond them to pick up something like Diamond or even Seadrill. So you can see it's one of those beautiful kind of consolidation graphs where they're just picking up more and more. And they've also cleaned up all their debt with the restructuring. So yeah, I love the whole space. I've kind of run through sort of the order of them that I like and who I think has the most leverage, because they've each got sort of a different mix of sort of rigs. But yeah, I think the whole space is going to do amazing, really. It's because something I've been looking out for a while is the start of this sort of tax duty to fund the green transition, or just straight fund consumers. And you started to see calls for that, like when BP announced a 12 billion profit last year. They basically said like there should be windfall taxes on that to help fund consumers because of the pain that high energy prices are causing them. So if you're an investor in BP, they're just literally taking your shareholder value, putting in the dustbin, pouring petrol and lighting on fire. Like they couldn't make worse decisions than they're making. They're dumping their entire sort of, I think it was 25 billion with Rosneft. They're going into renewable auctions and paying double the last sort of quoted price. So they're lighting money on fire that way. And then they're just dumping all their oil assets. It's going to be looked back on as one of the biggest kind of value destruction. But yeah, I think Looney will oversee some of the biggest value destruction of a public company over the last decade.
It's just so crazy because, America just fought the COVID war. Our national debt doubled to like 30 trillion. Now here's this inflation war. And you're right. I've heard people say, we'll have to do like a universal basic income, MMT type of stimulus, fiscal stimulus to offset the rising oil prices, all while not fixing demand. And that's just going to bankrupt the government even more. And it's just leading somewhere really bad. If you look at like the rise in East power, right now, China's pretty much going to control Russia. Russia's going to be more dependent on China, and they're going to own all that commodities, all those resources. And Ray Dalio just did a piece, firmly believes that the American empire is on the decline. I don't know if you've seen his like life cycle of the empire kind of thing.
He's got some great charts like he's got a chart I love, which just shows the rough life cycle of every sort of currency superpower. And it's just a standard cycle. And yeah, it's just good times lead to poor choices, and then someone else takes over. I always push back against that though, because I think people always think that it'll happen far quicker than it does. Like the telling part of a lot of those is that they're often in decline for like 50 years, 100 years. Like it's no, not 100 years, like sort of 20 to 30, 40 years. And everyone that's sort of doomsday and it's going to all happen tomorrow, that's not correct either. It's just a gradual process, like kind of like like with Great Britain, they didn't wasn't just a big bust. It just slowly became less relevant, and US kind of took over. And I think we're going to see that with sort of east-west polarization. Just poor decision after poor decision, and just slowly become less relevant. And you'll see the East capitalize on it, particularly China over time. Yeah.
Yeah, well, that's why I look at these big shocks, because it's like World War One and World War Two kind of crippled Britain, right? Well, COVID really like hurt the US fiscal situation, and now the big inflationary mess is going to do the same thing. So we'll see how it plays out. But again, I've thrown every devil's advocate argument at you, and it does seem like all roads lead to higher oil prices, at least in the coming months, right? So you're a buyer on dips, absolutely, right?
Yeah, I just find it hard because it's obviously really run away. Like this, I don't like to buy into anything that's done what oil's done now. So when I'm talking about positions, this is all stuff I bought months ago. Service is probably the one area that's still hated enough that you can get a decent amount of value. And yeah, I've been racking my brain for angles on the whole Russian crisis, because that it's a lot of as sad as that is, there is a lot of opportunity from knock-ons as well as the actual Russian companies themselves. But it's trying to get even be able to buy them. Like, it's obviously you can't actually access any of them with brokers now, and if you do, I don't even think you get the RSX, the ETF. I think they've ceased trading on that. But even if you bought that, that's just it's quite a binary bet now on whether those depository receipts, like they don't actually own the companies, they own depository receipts, whether they'll fire sale them on you or not. And so don't really like those type bets. I've just finished a presentation for Crux where I've got a really good angle, I think, on Russia that I don't think anyone's seen. So kind of excited about that. But yeah, it's hard. You do have knock-ons like Russia controlling the majority of palladium market, and then they've got like 46% of the palladium market, and then you look on and the other major producers, South Africa, and they're equally as much of a mess. And so you can sort of search through that market looking for angles. Also titanium, they've got like a third of the global titanium market. Nickel's already gone pretty vertical now. And then like niche weird stuff like neon gas. So that's what I spend my time, like just trying to look for a nice angle on it.
Absolutely. Love that. And so one last scenario here. So Biden is visiting, Biden advisors weigh Saudi Arabia trip for more oil. Is there anything that they can do to have the Middle East just turn on the spigot? All of a sudden there's news out that OPEC is just going to increase their production. What do you think about that scenario if that happens?
That won't happen because, yeah, it's similar to, I just recommend everyone go read Josh Young's white papers. He's just gone through the Saudis, and every time they've supposedly got this extra 1 to 2 million barrels of spare capacity, every time they've even come up near that, then they've drawn down their inventories. So he just doesn't believe it exists. And then if you can go down the whole name's escaping me, wrote a whole Twilight in the Desert. Just that it's actually interesting going through what the Saudis have even done with when they listed, because they couldn't get the valuation they wanted on the markets, because then they would have had to open their books, and everyone was telling them it wasn't worth 2 trillion. So they just listed it on their local exchange and got a whole lot of rich princes to bid it up, obviously probably with some encouragement, and got the valuation that way on quite a small float, and then use that to do sort of a secondary, and that's how they've maintained the sort of the valuation. And so that's just a complicated way of saying that they could never prove that their reserves and sort of capacity was what it really was, and that was how they kind of avoided ever having that examined closely. And so, yeah, the overall view is that they're, I don't think they have the spare capacity. And same with Russia, they've underinvested, and they don't have an ability to ramp. And I think we're gonna find that out in a big way over the coming years.
Similar to oil, which is pumping right now, you've been a uranium bull, right? And so is it a similar situation where there's a supply demand deficit and the supply chain pretty much is all screwed up and like policymakers have not been investing in it correctly? Is it similar to oil?
Not really. Like uranium's just a funny market because it just goes through these long-term cycles, just because the way it's so opaque, it's so tiny, such long-term contracts that and then sort of layer Fukushima on top of it. It's really its own unique market, and the fact there's no real convertibility. Like once you've or substitutability, once you've kind of invested in a nuclear power plant, the percentage to kind of buy the uranium is kind of an afterthought with the cost of the entire plant. So yeah, it is why I'm probably still 80% of my portfolio is uranium. Even with the recent price increases in oil, it's still uranium just keeps holding its own. It's obviously done quite well. So yeah, I think uranium's pretty much set in stone as to when it goes. I think we've seen a spotlight put on it with Europe just understanding it has to play a key part in them sort of attaining some sort of energy security. It's you can't have energy security with renewables. They obviously aren't going to allow gas, coal's unacceptable. So yeah, I've even seen articles recently, like Belgium's considering extending, not shutting down their nuclear power plants, extending them. Germany's looking into the possibility of restarting theirs if things get hairy enough. Obviously, France is going full into it again with building out their fleet and investing in sort of more research and development. And yeah, all of this is just a bonus because the thesis didn't really need it. The main growth story was China, and they're full steam ahead, and they kind of hit their targets. So, as Raul likes to say, it's kind of a win, not a story. It's literally the most asked question is, Ferg, talk more about uranium. I'm like, I've placed my bets. I don't care now. I've done the work. I understand where this is going at some stage, and I really honestly spend very little time on it now. Apart from occasionally, like when you get opportunities to tactically trade it, like the recent example of the Ukrainian plant having a fire, and then you see everything get absolutely annihilated. I love to step in with, like, I've got certain strategies like 2-3 month bull call spreads that I like to sort of step in and capture value that way, because that sort of helps offset the spike in volatility, and so you can kind of play quite a sharp mean reversion trade. So those have been working well whenever there's a sort of a heavy sell-off that I don't think is fundamentally sort of has any, or doesn't really have a good reason for it.
Wow, that is just huge. You just blew my mind. So as of today, March 8th, you've allocated your capital for the future 80% in uranium.
Yeah. Well, it was never, that wasn't cost. That cost, it was probably like high 30s, maybe 40%. Yeah. And then that's just been appreciation. And I've been trying to rebalance. I've been trying to get sort of coal and oil and tin as higher percentages, but so the uranium's been running the hottest, so it keeps crowding out the portfolio. Yeah.
Wow. Still though, it just speaks to how bullish you are on it. If in this environment, we just talked about oil for a long time, you're that bullish on uranium. That's how well positioned you are for it. And that's why I love talking about oil, because do you agree is it kind of a direct driver of the world towards uranium? Because the higher oil prices go, the more reliant people are going to have to be on it. So is it literally a linear effect?
I just think you can boil it down to energy in general. We need a certain amount of energy. Where it's going to come from. You can draw all sorts of long-term charts with GDP and energy, and it's literally might as well be the same chart. There's guy really enjoyed all his work, Vaclav Smil. He's got a saying that he said when people talk about talk about energy and the economy as if they're two different things, it's tautology, because they're essentially the same thing. All the prosperity we've experienced over the last century or century and a bit has been purely because of what we've achieved with sort of energy. And it's also like the bigger picture is energy return on investment, which is the most worrying, is that's been really declining for decades now, and we're getting to a point at which we're below what we need to maintain the level of a society that we've become accustomed. So it's a guy called Michael Kelly that's broke down. He's like gone through and broke down sort of the energy return on investment required to sort of maintain a whole lot of basic requirements of society at the moment, and shown what energy return on investment we'd need for it. And so he goes from like I think it's like 1.1 is just to extract the oil out of the ground, sort of 1.5 is to refine it, and then he just goes to truck it to grow food with it. It's like 1.1 to 3, then right up to education was like 1 to 8, like healthcare was like 1 to 12, I believe. And then this explains that everything we're installing at the moment, the likes of wind and solar, most of that's got an energy return on investment of sort of 1 to 3, 1 to 2. So you're really relying on the high energy return on investment of coal and gas and oil that we're no longer producing to kind of subsidize these super low energy return on investments. And as you keep kind of trying to kill the high versions and rely more on low, then you're going to drag down the sort of the energy surplus, and what we can bring real big questions about how we can maintain the standard of living if we're not going to revert to high energy return on investment, whether it's nuclear or, as kind of the play I've made, is coal's the only one that's kind of holding up its energy return on investment. And it's kind of part of my thesis is for a lot of the underperformance of renewables, that slack is going to be taken up by coal, because you better believe the whole developing world isn't going to follow Germany's example. They don't. Even here where I am in Indonesia, they if they can see a blackout coming, they just shut off exports. They're the largest exporter of coal in the world, and they don't care about price. They just keep it all here if they need it, and talk about nationalism. So yeah, that's kind of my big overarching view.
Well, that was the wise, measured, like well thought out analysis you did when all this stuff was crashing and you were super contrarian. But now we have this geopolitical firestorm, which literally is just like igniting these trades up. And it just speaks to why people need to follow you, because we did an interview and Peabody Energy was like $3 and now it's $22. That's a coal company, right? And you were bullish Peabody Energy at $3.
Yeah. Well, that's my bread and butter, though, is when everyone hates that everyone thought it was going bankrupt, and you just have to crunch the numbers, go through it, see where you think the commodity is going, and kind of gives you enough of a margin of safety. Some of them blow up in your face, but when you get it right, you generally get it really right.
Yeah, and
it's easier when they've come out of restructuring as well. That's my favorite players. Sort of, you mentioned Noble before. It makes it a lot harder to be wrong when I think Noble wiped out, I think it was 3 billion of debt. I think Valaris was even more. Yeah. So you've got these guys that have pretty much wiped out all the vast majority of the debt, reduced their debt servicing to nothing. They've still got all their assets. It makes it hard to go wrong.
Yeah, 100%, because they're you know they're not going to go bankrupt for like at least a few more years, right? Because they just got out of it, right? So
Yeah, we were alongside the who were the senior debt holders. So they debt for equity swap, they become the new equity holders. So they want to make sure that they don't get busted up when they've just come out of this. So they at least give themselves sort of a 5-year runway. So you're next to them when you get in, and so you've got good company. Unlike kind of jumping into a lot of the stuff you see these days, you've got terrible company. The tech.
So that is a whole nother ball game. I actually watched an interview of Kathy Woods where she's like going through kind of the sector performance of the S&P 500. And she's like, the only one that's up right now year to date is energy, which is up 30%. And I'm just like, I just in my head, trader for, because you were, energy, right? So
yeah, I was also there talking through ARK as well. So ARK was always a basket case because of how she structured it. So yeah, just the structure of that, the fact that she was going to benefit from inflows, yet she had no ability to like gate funds. So as soon as she underperformed, everyone was going to start selling and require sort of daily liquidity. She'd work through her liquid names, and then because it was a kind of a reflexive cycle on the way up, because she was buying highly illiquid stocks, and the amount of flow she was getting, she was creating a lot of their performance. So it was the more outperformance she would generate, the more inflows she would get, the more she would drive these up. Well, now that whole thing's gone into reverse. She's like sold the majority of her liquid names. She's worked through the majority of her sort of Tesla holdings. And so now she can't prop up these things. And so once she starts selling them, like, yeah, she's like a very large holder in a lot of these. For a while there, she was over a 10% holder, like pretty much a filer and a whole lot of these things. So yeah, that's why I forget the time of writing. At the time of recording this, I think, what is it? More than cut in half, isn't it?
yeah, absolutely.
It's in the 50s. Yeah.
Yeah, I didn't even know it was in the 50s. Oh my gosh, it's so bad.
Yeah.
I guess, we talk about uranium, we talk about oil. As a contrarian investor, though, it's difficult for me to see kind of like the Reddit crowd piling onto these oil stocks. I mean, and you can get a feel for where sentiment is going. Like now all the oil CEOs are on CNBC. I guess uranium is still kind of undiscovered and early stage, but what we've talked about, is it true that you think this is kind of a multi-year kind of story that's playing out? So even though it's going to get frothy, even though there'll be volatility, you're still going to ride it out, right?
Yeah, well, it's going to be the most difficult thing. Like if anyone wants kind of what I'm kind of thinking of is something like the Chemico chart. So you had a hellish spike and then a massive retracement before like an even bigger spike later. And I think it's kind of possible we could see something like that, just to sort of blow off and then a pullback, because that blow off has caused sort of a bit of a bust. And then then the supply demand bites even harder. And so that's what I kind of mean when I'm talking about volatility, because when you go through like uranium, it's interesting. If you go back to 2005, when you were looking out, it was never actually a deficit. So if you look 5 years out from 2005, it was actually 72 million pounds surplus. And if you look out 5 years from now, you're pretty close to that deficit. So that's the difference. And that's what I don't think a lot of people have wrapped their heads around. Is a lot of people have this idea of not like supply disruptions, but not structural deficits. And like a oil embargo, that's something that can be worked through and then taps turned on. A structural deficit requires CapEx, investment, years of these projects being brought on. I loved a interview with it was with a Newport CEO talking about how quickly he could bring supply on. He's like, even if I found a new mine tomorrow, like you're talking 5-6 years. It's longer for uranium. Some of the Kazatomprom stuff could come on quicker, but I think everyone's thinking in terms of temporary supply disruptions rather than structural deficits, and that's where the sort of craziness will come from once that realization sets in that it's going to take time to bring all the supply on, because it's the sector's been so capital starved for so long right across the board. I don't know what we find it differs much, because I generally have no cash at the moment.
Right.
fully invested, but I'll be riding it through.
Yeah.
I don't have any leverage, so that's the main thing. Don't try and avoid leverage, or if you are going to take leverage, make sure it's with sort of options so that you can ride through some pretty serious volatility, because it's pretty necessary at times. Like, you never know. Like this, yeah, like the Russian example is just see. It'll be interesting if they don't fire sale all the depository receipts and all those come good, because that would have been some of the most crazy volatility people would have weathered. Like, literally buy something, pretty much go to zero and then bounce back. So yeah, that's always been my thing. Make sure you stay at the table. There's nothing worse in the markets than having the right view but getting knocked out of the market and then seeing it do exactly what you thought it was going to do. So better to be a bit more conservative and use no leverage than use leverage and get knocked off the ride.
Absolutely. So where could people go to find you and stay on top of these updates as this insane market unfolds?
So I'm still on Twitter. I'm a bit quieter on Twitter. I've just kind of burnt myself out a bit, so not tweeting as much, but I'm sure I'll get back into it at some stage. I still have a newsletter, so at traderferg.com, and I do 2 weekly shows at Crux Investor. So that's where most of my efforts going at the moment. Usually interview or just show people what I'm doing with my portfolio.
Super exciting. Thank you so much for stopping by and sharing these insights with people. Like, you were one of the few people talking about this stuff a while ago, and people really needed to hear it. So thank you so much.
Yes, appreciate it.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.